Hello traders, Gary Wagner here. Just after 11 o'clock in Honolulu, 4 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands. 10th day of February 2017, and this is the Daily Report for Gold and Silver, our weekend review. And what a week we have had in the market, with precious metals absolutely holding on to their weekly gains, continuing this extended rally, and equities closing the week out and extending these new record highs to move to yet a new record high today. First, to gold. Gold basis April's futures contract trading at $1234.60, putting it down about $2.20. The low on the day has been $12.22, and the high on the day has been $12.38. Now, the net changes may vary, but the prices are very close. When we look at spot gold is at $12.33, up about $5 on the day. We did send out a special trade alert recommending that traders who are trading single contracts of gold go ahead and pull profits. Those that did that pulled profits at roughly $12.29 yesterday. We also recommended that those trading multiple contracts should liquidate half, maintaining longs on the other half and maintaining current stops. Of course, we'll talk about our current trade and the net results when we pull up our first gold chart. Precious metals as a whole did exceptionally well, but the industrial metals tended to really outperform the safe haven metals such as gold. Silver closing near $18 at $17.94. Net change of over a full percentage point, up 20 cents on the day. So traders, yesterday I sent out a special trade alert recommending that those subscribers that are trading single 100-ounce contracts in gold should go ahead and close out their trade and pull profits. That's after we saw the market come under pretty dynamic pressure. And I also recommended that traders and subscribers, I should say, that are trading multiple contracts to liquidate half of them and let the other half run. Market closed at $12.35. We got out at $12.29, in at $12.03, so $26 or $2,600 per contract, which is about a 30+% profit on this trade, considering gold's margin at just about $7,000. Now, did we get out too soon? Although the market is at $12.35, let's see what happens over the next couple of days. To quote one of the most famous stock traders of all time, Herbert Hoyle, who was interviewed and asked, how come you typically profit consistently trading the equities markets when the majority of the traders lose? His answer was a one-liner and simple. He simply said, because I always sell too soon. Hopefully that's what we're looking at. But most importantly, as I said yesterday, we are never wrong taking a profit. That being said, what is our current forecast for gold, and where do I think prices will head next week? One of the primary reasons, besides the fact that the market was selling off fairly dramatically yesterday, that I initiated the signal to cover and pull profits, was the fact that our initial target, which is a 61% extension of this last rally, what I'm labeling as a wave one, was in fact hit, and this is that rally right here, goes to 61%. And as you know, earlier in the week, I said that one of my models is for the market to genuinely trade to this level, retrace a little bit, and then move into a second leg, because a third wave is not going to be the shortest of any of the impulse waves, and therefore my overall interim forecast is still sitting right at around 1280, and 1280 is a one-to-one relationship between the price change exhibited in the rally starting at the mid-December point last year, concluding really the last week of January, as we saw this market move up to this particular price point here. We then had a 38% retracement. That took us to the beginning of February, and now we are in this current rally in which we've seen the market move from roughly 1180 up to about, call it 1240 plus. 1242 is really where the market opened at, and I believe 1246 is the absolute high. So traders, in terms of our current studies, We're using Fibonacci-based extensions as well as retracements to gather those results, and we're relying heavily upon Fibonacci harmonics. Harmonics are simply where you have two different time cycles. For example, this time cycle representing a fib retracement from the move down, in which market traded from about 1380 all the way down to these lows that came in at the end of last year at 1120, as well as our retracement and extension of this most recent rally, in which we've seen pretty much a $100 rise in the price of gold. Now, that being said, a harmonics is when you get a equal or a similar result with different time cycles. So one of the things that we see is 1220. 1220 is absolutely a harmonics, and then we have another major harmonics which occurs at 1280. Now 1280 is a one-to-one extension from this rally here to the next rally, in which I am forecasting the price to go as high, as I said, as 1280. It is also a 61% retracement, 1279, of this move down. And therefore, I really believe that this particular level is a key level of importance. And I believe that our target right now, in terms of an intermediate target, is still pretty solid at 1280. We have hit our initial target this week when the market went to 1242. Therefore, my recommendation for those traders that pull profit, obviously we're going to go in over the weekend flat. I will tell you exactly what we plan on doing come Monday morning, whether or not we're going to immediately initiate another position for those traders that are trading multiple contracts and have liquidated half. The other half, you are still maintaining your stop below 1220. We were safe today with a low at 1222. In other markets that we look at, the Nasdaq, the S&P 500, as well as the Dow Jones Industrial Average, all closing at new record weekly highs and new record daily highs, with the Dow Jones Industrial Average closing at 20,269, putting it up almost 100 points and almost a net change of a full 0.5%. When we look at the Standard & Poor's, about 0.4% in terms of the net gain. We are in record territory at 2316. And then lastly, when we look at Nasdaq, that also closing at a new all-time high, 5734, and that, of course, is the Nasdaq Composite Index. Interesting action also in the dollar, because for the first time really since December of last year, we have seen the dollar actually have some substantial gains and is now showing us some real support that we have been alluding to at around 99, with the dollar index closing well above 100 at 176. U.S. equities continue to climb to new record highs. This week really being influenced by not only higher oil pricing, but statements made by President Trump in which he says a forthcoming tax relief program will be, and I quote, phenomenal. And also that he's got Gary Cohn at the helm of that tax relief policy that will be announced next week. We have now the third consecutive week, this being a weekly candlestick chart, in which the Nasdaq has closed at a new all-time record high. Dow Jones Industrial Average, as witnessed by this weekly chart, closing at a new all-time record high. And finally, the Standard & Poor's 500, new all-time record high at 2316. So traders, if you recall from last week's weekly review or weekend review, as well as comments that we have made throughout this week, we talked about the fact that as this market, this is the dollar index, this of course is a weekly candlestick chart, after hitting 103.61, we had this tower top. It could be tower tops as well as tweezer tops in terms of a candlestick pattern. We also identified the fact that in terms of straight patterns, we had a three-river evening star, although it didn't confirm the following week. We've seen this downside pressure. We talked about the fact that the most logical place to look for potential support is this 38% resistance area or support area at 99.14. That, of course, is the point in which the market did find support, this being last week when those lows were reached. And as you can see, that for the first time since mid to end December on a weekly basis, we have seen the US dollar index actually gain value. First time. Second thing, on a weekly chart, we have now identified an engulfing bullish pattern, simple 2-day pattern that is defined as following. After a defined downtrend, we've met that criteria. You get a red candle kind of finishing, culminating the downtrend, and then you get a green candle which opens below and closes above the range of the prior week. We've certainly got that. Now, the final candle that we would need to confirm this pattern would be a confirming candle. And in terms of a confirming candle, that would mean that what we would need to see next week would be a green candle, meaning that it closes higher than it opened that week with a higher high and a higher low than the preceding week. That would be an engulfing bullish confirmation, and that would certainly be signaling on a technical basis higher pricing in the US dollar index. Traders, this has been one exciting week in the financial markets with tremendous gains in both equities, risk on as well as risk off safe haven assets such as gold. We did pull profits for our active gold trade, in which we got in at 1203. We got out at 1229 for a profit of $2,600 per contract. Traders with multiple contracts have pulled profits on half of their positions, letting the other half run, with stops still just below 1220, low today 1222. So we'll go in over the weekend with active positions in gold. For those that liquidated and are sitting flat, we will look to re-enter the market depending on how the market opens up at the beginning of next week. But in terms of taking a profit, I'm reminded of a story by Warren Buffett. In fact, I had recently watched Becoming Warren Buffett, a very interesting documentary in which he lays out his investment strategy and the fact that he developed a technique when if followed methodically, will lead to exceptional results. And it really is what he calls the 2 rules of investing. Very, very simple philosophy. Rule number 1, never lose money, never lose dollars. Rule number 2, never forget rule number 1. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you on Monday for another daily update and review. Have a great weekend. Bye-bye.